and welcome. Today we're talking about a brand new offering, the Motilal Oswal Consumption Fund. Now, India's consumption story has been one of the strongest drivers of growth, and this fund aims to tap into that very theme. So, to understand what it is all about, why now, and how investors should look at it, I'm joined by Akhil Chaturvedi. He's Executive Director and CBO at Motilal Oswal AMC. Welcome, Akhil.
Chira, thank you so much.
So let's begin with what this fund is actually all about. And when you say consumption, how do you define that in your portfolio?
Chira, thanks. I think we're doing this NFO at probably one of the best times we can think of consumption being a thematic NFO. Let me start in reverse order. Why we thought about doing this fund today. So what we have seen in the calendar year is clearly that the government over the last couple of months clearly has been trying to do a lot of reforms to bring about a lot of momentum on the consumption. Whatever reforms have been done or they're attempting to do is basically to ensure that our economic growth trajectory can actually accelerate on twin engines. One is on the investment side, basically where they are investing a lot of money on building infrastructure and manufacturing capabilities, and a lot of reforms have been done that side. On the consumption side, starting with our budget, when they announced that there would be no tax up to 12 lakh rupees, that was the first measure to give more money in hands of households such that they can, spend much better. The second important reform, in a way, you can say, thanks also to because of the controlled inflation, we have seen 3 rounds of rate cuts, right? About 1.5% or so, which means that now the cost of money gets cheaper. Home loans are down by 150 basis points. Auto loans are down by 100 basis points. And it helps consumers to accelerate their consumption, prepone their consumption by using one more money in their hands. And on the other side, use lower cost of funds, which can give them greater affordability in terms of the EMIs. The third, which is a master stroke, what has happened, everybody knows in the month of September, where the Prime Minister announced on 15th August that he would be giving a Diwali gift to all of us. And then simultaneously, we saw the Finance Minister come out and talk about the GST reforms, GST 2.0. Broadly, 99% of goods and services have been bought down to 5% and 18% slabs, impacting, I think, all kind of consumption activities. And when this got announced, honestly, we were very, very sure that this is a great time now to go ahead and try and capitalize on the consumption opportunities. So three things. One, again, tax relief up to 12 lakh rupees, interest rates on the softer side, cost of the goods itself coming down. All three, I believe, are like triplet reforms to boost consumption activities in our country, leading to 25 to 50 basis point acceleration in our GDP growth rate, right? So I believe that the government has taken proactive initiatives both to drive the manufacturing infrastructure side of the economy and the consumption side of the economy. Now, we all know that consumption is almost 60% of our economy. And the consumption is basically broken into two parts. You have basic consumption and you have discretionary consumption. Basic consumption basically means is consuming day-to-day items which are for your living, like a basic fooding, a basic clothing, or a basic housing, those kind of things, right? Which you cannot do without, irrespective the economy is doing good or bad, irrespective there is a health crisis, no health crisis, whatever it may be. You will not, you will wake up in the morning, you will you have to brush your teeth, so you have to do that. You can't do without it. You have to have your breakfast, cereals, etc. You have to do that. You can't do without it. You have to take care of your personal hygiene, all that stuff. You have to do that. I mean, it doesn't stop, right? Now, by all of these measures, we feel that the staple side of the businesses will not get incremental growth, right? It just gets cheaper, and that also leaves more money in the households. So the other part of the under the consumption sub theme is the discretionary consumption theme. Now, discretionary consumption means where consumers have the discretion to decide what they want to consume and what they don't want to consume. Now, typically in a tailwinded macroeconomic environment where there is a lot of excitement, optimism, exuberance about overall economy, economic growth, which is in turn benefiting your income stream, then consumers in such kind of times tend to choose to upgrade their lifestyles beyond what they consume, which is the basic consumption, right? Now, these are the times where you see that consumers will try to look at if they're owning a entry level two wheeler, they will go for the premium level two wheeler segment. If they're owning entry level cars, they will go for SUVs. Or you will go for branded clothing or branded jewelry. People will try and plan for vacations, bigger vacations, whether this is in India or outside of India. People will try and upgrade their washing machines and refrigerators and televisions, etc. And with this relief on the GST and more money in the hands of people and lower cost of fund, I believe that the discretionary side of the consumption economy is going to get a big lift going forward. Now, the another beauty what I see is that the timing of these reforms have been done perfectly well, right? Because the GST has actually been executed on 22nd of September, which is first day of Navratri. And this is the time, or this is the period from where celebrations start in India. So from Navratri getting into Diwali, which is also preponed into October, and then getting into New Year and Christmas, and then getting into the marriage season. So for the next 6 to 9 months is all about celebrations and festivities in India. And this is the time where consumers actually tend to spend a lot more, being all the good days, etc. And then you have this whole stuff coming down, prices coming down, and all of those things will kind of accelerate the purchasing capacity, the purchasing power, all of those things. So we had plans to launch the consumption fund some time back, but at the pace with which the reforms are going on, we thought that okay, now is the time. Because eventually, if more goods and services are sold, more discretionary items are sold, eventually will benefit the companies which are actually providing these goods and services. They will see increase in their sales, resulting into increase in their revenues and then the profits, and then we can hope that it will also reflect in their market cap. So typically the thematic funds or the sectoral funds need to be timed, and from the timing perspective, I think it's a good time to really enter into this theme. Now, I just want to also clarify that we are not proposing this theme for next 6 months or 1 year or 2 year. I believe that this theme is going to be it's a multi-decadal theme. One can break this into next 5 years, next 10 years, and next 25 years. The rationale being that the other thing which is playing in India over the last couple of years is that as our economic growth is accelerating, leading into multiplication of the overall economic growth. So our GDP has grown from 1 trillion to 4 trillion in last 17 years. And if we assume that if we grow at the same rate, 9% for the next 5 years, we are looking at a $6 trillion economy by 2030. At today's $4 trillion, our per capita is $3,000. And broadly, every $1 trillion getting added to economy will add about $1,000 to $1,500 to your per capita. So not only are the things getting cheaper, but your average income or average income of an Indian household also is growing at a good pace and likely to grow in the next 5 years and then leading into 15, 20, 25 years. I believe this is a very, very long-term theme. You can play this in small parts, and but certainly this whole rise in per capita is another way to look at that. And we all know that India is an emerging economy, right? It's an emerging market. Over the last 10 years, we have brought 250 million people out of the poverty line. All these people have gone into lower middle class. The lower middle class is moving into middle class, so on and so forth. And this is becoming a very large bucket of the overall population, which is where this mass level discretionary consumption is likely to happen. Therefore, I say that it's a long term theme. It may have short term cycles, but try and play it out over a longer term period. So I'll stop here and let's look at the next question.
Right. So, what is your stock picking strategy here? How will you decide which companies make it in this fund?
So, point number one, our consumption fund is going to be focused on the discretionary consumption side of the universe. We are not really looking at the staple side. We will be underweight on staples. It will be a premium consumption fund. So whichever businesses who are basically catering to consumers on the premium side or the higher end of the consumption segment, that is the segment we are looking at. For example, I mean, broadly, we will look at the jewelry theme, which seems to be very tailwinded. We will look at consumer durables, tailwinded. Electronic manufacturing companies again looks pretty tailwinded. So these are, I mean, autos, EVs, two-wheelers. This is another sub-theme. These are the areas where we feel that these are the high ticket consumption areas. So this fund will be focused on the premium side of the consumption activities. Point number one. Point number two, this will be a focus fund of 20 to 25 stocks.
Okay.
We will not be creating a long tail portfolio of 70, 80 stocks. It will be focused on the top 20, 25 companies, driven by the third parameter, which is companies demonstrating high earnings growth trajectory. Right. Fourth point would be that this will be a fund which will be very index agnostic.
Okay.
Right. So we are targeting anywhere between 70-80% of the portfolio being very away from the index. So idea is to give you a premium consumption fund focused 2025 high growth stocks, very different than the index construct, and then overall try to outperform the index. So this is how we will create the portfolio.
All right. So, you've told us why you're launching this fund now, but how is it different from a regular diversified equity fund?
Regular diversified equity funds will typically have anything and everything. It will have manufacturing, it will have infrastructure, it will have capex oriented companies, it will have banking, financial services. Anything and everything is open. This is a thematic fund. And the fund is called consumption fund. So it will have only companies which have got anything to do with consumption and consumer activities rather than going into manufacturing and infra. And you will not find those kind of businesses in this fund.
Right. So within consumption, there are new sub themes, like you mentioned, premiumization. So there's health conscious spending, there's digital retail. What opportunities and risks do you see there?
Opportunities we have spoken. The opportunity
Yeah.
is huge. The whole growth in the per capita income over the next 5, 10, 15, 25 years. That's the big opportunity. Reforms to augment growth is another clearly tailwind what we can figure out. The risk will always be in thematic that themes go in cycles. For example, at some stage after a couple of years, for some reason, I hope it never happens, but for some reason, there is a slowdown in the economic growth activities. That is the time, like I said, that consumers may use the discretion to not purchase all of these things and go back to all the basic consumption they do, right? So those are the times when you may see that the companies in this theme, may see some slowdown in sales, revenue, profits, and therefore they could drag in terms of returns. So it's a cycle. It's cyclical. It's more cyclical than a diversified fund. Either you timed it to perfection that you get at the right time and go out at the right time, or you become a long-term investor. Like I said, that I think this is a multi-decadal theme. Just stay put for 10, 15, 25 years and benefit from this huge growth opportunity which is glaring in front of our eyes.
So finally, one more question. Who should really consider this fund and how should one use it in a portfolio?
So, Ruchira, anybody and everybody can consider this fund. We need not really demark this into some segments here and there. Uh, I always say that if you have 100 rupees and if you're creating a portfolio, typically 60 to 70% or two-thirds of your portfolio should be well diversified funds. So your flexi caps and the multi caps of the world, these are core funds where your allocation should go. Now the 30 to 40% remainder is where you should look at these thematic ideas, unique ideas, boutique products, where you feel you have the confidence, you have the conviction. It could be anything. Like I said, we've done a manufacturing fund, we have a digital fund, we now will have a consumption fund, we have a business cycle fund. So there are many opportunities available depending on one's comfort, conviction, confidence. you can choose the discretion of 30-40% to go into such kind of products with a longer term outlook and ability to take in stride short term volatility or short term corrections.
All right. Well, with that, we've reached the end of this conversation. Thank you, Akhil, for sharing your insights on this NFO by our AMC. Thanks.
Thank you once again.
Thank you. And to our viewers, thank you for joining us. We'll see you in the next conversation very soon.